Good morning, everyone. Let's get going. My headset is fixed. Back in business. All right. Last night's session on the S&P gets a little bit of a wobble after the Fed spoke, but nothing too dramatic. Probably as benign as you can expect the reaction to be. Typically, we have about at least a 0.5% spike, one way or another, as they start speaking and the comments start rolling out and any language changes are obviously picked up by the algos immediately and they spike or they rip lower. Yesterday actually we didn't see a whole lot of that, so I think more or less kind of coming in line with what the market was expecting. I think it was really hard for the Fed to really impress or beat on expectations. The everything that we got obviously yesterday was priced in. They continue to be pretty dovish. I think the one thing that they did mention that was maybe a little bit more hawkish than some of the statements previously is they mentioned that some of the slack had gone out of the labor market, which is a little bit more hawkish than some of the things that we would have seen. I actually think that the Nasdaq probably would have been closer to flat line, but we were drugged down quite a bit by Facebook, which obviously was hit off of some of their spending plans for the year going forward. But other than that, I mean, the market was relatively solid on the day. I think it's I think it was, you would call it a win for the bulls camp. We had mixed action in Asia overnight. We had Shanghai trading well. Aussie was actually up a bit. Nikkei was stronger, and Hang Seng was a bit weaker. The one thing that we did get out of yesterday is we got a spikes in bond yields. We got a much stronger dollar. So, I think the return to normality and in the U.S. bond market has been absolutely shocking. The sell-off that we had in yields or the rally that we had in bonds, was so vicious only 3 weeks ago. It's actually, it's hard to forget. I mean, it seems like, it was longer than 3 weeks ago now, but it was absolutely wicked, bounce in the bond market, and we've just sold back all the way off to that. Remember, yields inverse to the price of the bonds, so the yields actually were falling at the time when the bonds were rallying. Now the vice versa has happened because we've kind of had a return to normality in the U.S. and we've got a little bit calmed down out of Europe, and so we see the dollar regaining strength. We've got the Japanese yen this morning back through 109 again, the euro dollar all the way back down to the 126 level. So we continue to really start to push back to the same sort of levels that we hadn't seen or that we saw at the peak, I think, when markets were running at their most bullish. So we'll have a look at some of those charts in just a minute. Obviously Nikkei got a big boost out of that weaker yen, but not a whole lot to really drive Asia other than just following on the back of the States. All right, chart of interest this morning from Charlie Bilella. He comes out with some of the best stuff in the market, and this is what's really interesting here. I think what he's kind of trying to show here is that when you have such an enormous swing in the VIX, in market volatility. I mean, you can see here we were literally at historic lows. We don't get any lower than that to swing through to that quickly. I mean, when you look on this chart, there's only one or two spikes. This is probably one of them. The other, there's not another spike where we make such a big spike and we actually aren't even hitting a bear market. So I think he's saying, here that the market's actually being a little bit complacent. When you have that sort of swing that quickly in volatility, it's because it's for a very good reason. And I think that it is something that we've got to obviously watch very closely over the next, the next few weeks going through to the beginning of the new year. And not saying that there's a bear market coming, but obviously there's big warning signs when the markets react that way. So keep your ears up going forward. All right, we've got MasterCard and ConocoPhillips today before the U.S. market, and Starbucks coming out after the market. The market data, we've got UK nationwide house price numbers coming out at the open here in the UK. We've got unemployment change in Germany. We've got South African unemployment and PPI at 11:30. We've got consumer confidence in the Eurozone at 12. We've got South African budget at 2. We've got initial jobless claims in the States, GDP annualized, and Bloomberg Consumer Comfort, and we've also got CPI in Germany. So the day sort of picks up really, I think, from about noon. We'll start to get a lot of data that's going to come through today. So enough data that I think can really drive markets potentially. So we'll watch out for that this afternoon as we go into the weekend. All right, let's get into a couple of the maps. No visuals. Fuck. How's that possible? Let's turn it off and back on real quick. Okay, sorry guys, it reports that there are no visuals there. Hopefully visuals are back. All right, let's get into some maps. Okay, the first thing I want to have a look at this morning, yesterday there's a couple themes running in the market. We had banks that really had a huge rally yesterday. We had, a couple of the stocks and the insurers and some of those things. A lot of these stocks starting to return to more or less what their previous highs were. We've got ABSA here that we pointed out 2 days ago when it broke out of this consolidation above 160. We made mention of the fact that we had just broken out. We probably had the height of the channel. It's already moved the height of the channel and some. So I think we've reached the short-term target there. But I mean, what I think is important here as well is that we really are coming back almost to test the highs already. I mean, when you look at it like this, when you look at all of the same sort of levels that we topped out on and we really wicked around, and we have one close above this level, or two closes above this level ever, and we already came back to fill that gap yesterday. So I think that's very, very bullish. I actually think that this is quite a big level in BGA, quietly a reasonable level. We get north of here, the thing can probably keep going. FirstRand as well. FirstRand, unbelievably strong. Coming up yesterday, almost testing previous all-time highs. I mean, the rally there in the last 2 days has been absolutely wicked. Same sort of thing. I think it's more or less hit its target from where we really broke out, above resistance here. But I just don't know. I don't know how much more upside we have. I mean, maybe these things come up and look like they make double tops. Maybe they keep going. Bottom line is we've had huge rallies in the banks. I think they're obviously overextended in the short term, but be careful if you're trying to fade them. I do think they're in a bit of no man's land. We've got Sunlam as well, which came up yesterday and also tested what were previous, not intraday highs, but basically close to previous closing highs. I mean, our previous closing highs are actually here at 68.70. We closed within 30 cents of that. So I would say that that's a retest of the highs there at 69. It's incredible considering literally about 10 sessions ago we were trading at 60. These are big moves and big blue chip stocks. So I think it could be an interesting little area maybe to put on a short at 69, close it. If we manage to close above that 69 level. If we break out from there, obviously you've got to know that we've probably got more upside to come. All right, Anglos. If we'll have a look here at Anglos. The chart's a little bit messy, but we were showing this chart before when we broke down from this little wedge pattern, and basically what happened yesterday, we kind of came up to test the 200-day moving average and also kind of test resistance here from a wedge point of view. I think we actually closed around this around this number in London, and I kind of think that there's some support or some sort of a level here at 236. If you look here, we bottomed out there. We kind of more or less bottomed around there, topping out here at 236. We dropped 236 again. I think it could be a catalyst for us to move lower, and I really think that these mining stocks are still to be sold on the bounces. If we look at MTN, you can see coming back up into some sort of resistance here. We've definitely been range bound here in MTN for the better part of of a month. It's been getting a little bit wicky below some of the below this level at 35, but bottom line is between 35 and 46 there's definitely been some sort of a level, so watch it. If we get above 46, I think this thing can make a move back toward all-time highs, but we could also reverse off of those levels. It could be a bit of an inflection point. Just watch that one over the next few sessions. And then the last one that I'm going to show is Netcare, which you can see here is made a bit of a kind of a broadening flag here over the past. I can actually probably tighten that up a little bit, but it's definitely broke out as of yesterday. It didn't trade well yesterday. It actually just traded down the entire day from when it opened, but nevertheless it broke out, and I think there's support here, somewhere just a touch north of 32, maybe a long here into year end, in the way that this is a nice bullish setup here, a nice little correction, nice little consolidation off of this long uptrend that we saw along here, and breaking out of that now. I don't see any reason why we can't continue on into year end and close it at new highs. And that's it for today, guys. Thanks a lot.